All right. Welcome back to the Ultimate Trader Workshop brought to you by the Harmonic Trading Club. Got a special treat for you. In this video, we're going to be going over a well-known classic chart pattern, not a harmonic pattern, but we're going to be sort of reteaching it, even reteaching it the way that I have it staged in the academy right now. So the pattern in question is the well-known head and shoulders pattern. But what I do to it in this video will probably help allow you to use it and deploy it a little bit more frequently. A little bit more frequently than people think it comes by if you have a trained enough reticular and can spot or identify chart patterns. But let's get into it. Remember, this is not a trade signal. This is not a trading advice. This is an actual educational class, educational and entertainment purposes only. So do not jump in your chart to CAD CHF, which is the pair we're training on, and go try to take this trade. This is to correct everything that you've been taught about the head and shoulders pattern. We are going to introduce Fibonacci to it as well, though, so that you can target it correctly. That being said, okay, not going to be here long. Let's jump right into it. It's basically right in front of us. Remember, and we're going to be correcting a lot of the misconceptions in the way that this is taught. And I'll be honest with you, the reason it's not taught correctly is because most people don't truly understand a couple of things. One, market structure. Two, harmonics. Three, Fibonacci. We'll put them all on display here. So right here where you're looking at, I'm going to start on the incorrect way. All right. Our head and shoulders pattern, if you notice, I just grabbed a random spot and I'll explain random to you. Or I'm using the head and shoulders built-in tool too. So if this is something you're interested in identifying and trading these patterns, TradingView has the built-in head and shoulders tool. It's going to line everything out for you and we'll get a chance to use that. Actually, for confirmation too, it's going to be pretty cool. So just grabbing this random part here and then coming down here, we're working on the left shoulder, come up with the tool right here, come down to the head right here, come up to get ready for the right shoulder and come down to the right shoulder. All right. And then out. So even you can even see in the thumbnail, if you go look at it or Google it, you'll typically see something that looks like this, and they'll say it's a head and shoulders pattern, right? You'll see something like that, and they'll say that that's head and shoulders pattern, or the inverse way will be coming down here, head inverse, basically. Okay, inverse head and shoulders, right? Which is the one that we are going to train on, but we're going to correct and make this better. Okay, so usually you'll see it look like that, and I'm here to tell you that it's more to it than that. Why? Because there was more going on before that happened, okay? Basically, what you're looking at is you're looking at an extended decision or indecision to reverse. So you're seeing that the reverse isn't just a stop and reverse, kind of similar to like when I teach on the 3-bar reversal. A reverse isn't just stop and go the other way. There's a process that takes place. Decisions have to be made. Accumulation, conviction, bigger parties, institutionals. There's a lot of stuff that goes into play, market structure that goes into play before price action reverses. And in the case of a head and shoulders, what you're seeing is actually it's just a longer conversation before that decision is made. It's basically a very drawn out case of indecision. If I spoke to it, it would look like this. Price is coming down. Rejected right there. We don't know. We broke that, okay, but we don't know if we're ready to reverse yet. We're going to come down, retest the prices over there, and then we're going to come violate and take out the structure that was created while the head and shoulders was forming. The same way when I tell you on the 3-bar reversal, you don't get confirmation until the third candle closes beyond the doji and takes that out, creating a level of structure. Same thing on the head and shoulders pattern, as you can see here. There's something else that I want to correct on it, though. You know how I jumped in and I just grabbed any random part just so it could end up in the shape of the tool. It's one of the largest misconceptions of the head and shoulders because, again, it's created off a larger use case than just what happened right there. Doing it like this would make it seem like, oh, this just happened. Well, no. You need to deal with the whole entire story. So let's go bring the whole entire story into the mix and correct this thing for good. So I'm going to delete our head and shoulders. We don't need it. I'll actually delete all of our tools. And I'm going to come out because, as you have heard before, look left, structure leaves clues. This head and shoulders is the result of this entire move that began here, where a decision has been made and confirmed that yes, a correction will happen. We don't know how far, but for the meantime, okay? So I'm now gonna grab the tool and I'm gonna suggest that that head and shoulders pattern is the result of a much larger set of framework. So starting from this swing high, coming down to start forming the left shoulder, coming up, coming down to form the head, coming up, coming down to the right shoulder, and then off we go. Now, another thing that no one ever teaches you is where's the target on it? It's the same way that we would do in any structure or trend-based trade, or maybe even our 3-bar reversal. Your target is based off of the highest high, the swing high to the swing low. Now, here's another thing that only Trey and the Harmonic Trading Club will tell you. Since you've already lost so much ground, that is accounted for in the price action. So you would no longer, because the decision is being made late, typically your target would be based off of Fibonacci retracement, swing high to swing low, and only the 618 retracement. But because so much is already lost, so much upward price movement, we're going to talk about the confirmation too. I almost skipped that. I went straight into targets. You're going to be able to go a little bit further. 786. I'll leave the 618 on there, but we'll talk about something real quick. 786. And remember, I'm suggesting that because so much action has already happened, 618 wouldn't really be a profitable trade. So you're able to reach a little bit higher. And in this case, before I go back down and talk about the entries, because I should have been talking about entries before target, what do you see? Okay, so now does this make more sense? That is where it is. So I understand a lot of people are going to be thinking the area at the 618, okay? But there's price action above it that could come into play, all right? So now that we've talked about the target, which is okay, identify the trade and talk about the target. It could go either way. Now I will go talk about confirmation. The same way I talk about confirmation when I'm talking about a 3-bar reversal, okay? So misconception. First, I want to jump back and clean this up a little bit. I want it to be pretty clean. So I'm going to jump back. I just went to the 1 hour time frame so I could get a little bit closer. I wanted to do that first. I want it cleaner. I like my patterns and I like my tools locked on at the right price. So that's all I'm doing is coming in closer. And you guys can do that as well. Even if you're using any of the pattern tools, just come in closer so that it can be, so that your measurements and everything will be accurate, the way you have the tool drawn out. And I even do that on the XABCD tool, okay? So I just wanted to jump out to the 1 hour where you can get a little bit closer and then do what you see me doing now. Back to where we are. So this is our head and shoulders pattern. See, they wanted you to think of this little cute little thing. No, it's actually kind of radical if you think about it. There's a lot going on because you don't just get to skip everything that happened and just jump straight into the head and shoulders pattern. Now you guys see this is the correction and the result where now this is a way of confirmation. Let me get a little bit closer by breaking and closing above the structure. And you know what? The tool shows you the neckline. Okay? That's why it draws that out. And then what you can see is we're on the 4 hour chart today, this morning at 2 o'clock during London. During London is actually when this was confirmed. Now watch this, the rest of the story. I always tell you that the chart will tell you the story. If you notice, price didn't just keep going. This confirmation, Price didn't just keep going. It started going sideways. It went sideways. It consolidated for another 12 hours, even though the decision has been made. Now, this could be a fake out. Price could fall down. But for all intensive purposes, the things that you need to see happen. So not entering as soon as the right shoulder filled and completed, because price action could have kept falling and a trader would have lost for no reason. Or in this case, would have been a case where he would have been winning and happy. But that break and close above that previous low right here, that's telling the story. This new structure high right here, trying to get it, fighting to get it, gets the new structure high, price is rejected up there, comes down, decision, sideways movement, consolidation. Now entry, with that being confirmation, it is my opinion that a trader is actually free to enter because he knows what his trade looks like now. Because remember, we went in and we actually set the target at the 786 retracement of the entire move. Unfortunately, even though we feel like structure will be created here at that neckline that was broken and violated, the stop is still going to have to be up under the right side shoulder. Okay, so this one right here, it's not as efficient as the 3-bar reversal. Where really under the 3-bar reversal, you really just got that doji up under you, and that's where your stops are going to go. This time it's got to be under the right shoulder. So that being said, this opportunity would look like this. Grabbing the long short tool, confirmation, we're kind of still in that range as the market is moving sideways. I'll put that back. As the market is making up its decision, are they going to validate that or invalidate it? It's been 12 hours. They don't know yet. All the swings and movement, they stopped. Okay? So we'll go ahead and we'll run it up to our 786 retracement. Unfortunately, stops up under the right shoulder. Now, even this trade here is still 2.18, still better than a 2-to-1 risk versus reward. So I think that'll do it for this one. Cleaning up the head and shoulders pattern. I think you can take this one and add it to your catalog. Save it, share it with a trader that you know that it can help. I should have asked that you guys hit the like button on something as dope as this. Who's ever cleaned that up like that before? Okay, if you want to know more about the head and shoulders pattern, this one actually beats the one that's in the academy. But if you want a refresher on it, where we started from, this is basically a rendition, a better revised version of it. We do have this in the Harmonic Trading Academy playlist, as well as a host of other things you guys already know. Everything pertaining to structural analysis, advanced pattern recognition, and harmonic patterns in the Harmonic Trading Academy playlist. So hopefully this is helpful, useful, and provides some value to you. That's all we got on this one. Share this with a trader that you know that it can help. Subscribe to the channel if you're not subscribed. Hit the bell icon so you can be notified when, of course, the most amazing videos on technical analysis are released on YouTube. That being said, you guys be good. Take care of yourself in the market, and I will see you on the next video.